Hello, hello. Welcome to the thrilling world of taxes, where the only thing more exciting than a new tax bracket is, well, nothing really, but I promise this is important and I'll keep it as fun as possible. Today we're talking about something near and dear to every taxpayer's heart. Taxable income. You know, the amount of money you made that Uncle Sam has his eye on. Now, taxes might not be your idea of a party, but trust me, if you understand the different types of income that are reportable to the IRS, you'll be better prepared when that tax season rolls around. And hey, maybe you'll even be able to keep more of your hard-earned cash. Before we dive into the types of taxable income, let's clarify what taxable income actually means. In simple terms, taxable income is the amount of income you make that is subject to federal and possibly state income tax. It's the portion of your income that gets taxed after any deductions, exemptions, and credits are applied. That's right, taxable income is what the IRS loves to get its hands on. And just so you know, your gross income, which includes everything from your salary to any side hustle, isn't necessarily your taxable income. There are adjustments and deductions that can reduce your taxable income, so no need to worry yet. First up, we've got wages and salaries. This is the classic, your W-2 income. If you work for a company or an employer and get paid regularly, this is where the majority of your taxable income probably comes from. It's simple. Your employer sends you a W-2 at the end of the year and you report it on your tax return. Think of it like this. Your boss hands you the check, the IRS takes its cut, and you keep what's left for bills, fun, and coffee addiction. That's the basic salary taxable income grind. Your employer has already taken care of some of the tax withholding, so you don't have to worry about calculating that part. You're welcome. Next, we've got self-employment income. Now, if you're your own boss or you do freelance work on the side, this one's for you. Think 1099, because you don't get a W-2 when you're self-employed. You get a 1099 NEC from clients or companies that pay you for services, and yes, it all gets reported as taxable income. Sure, it's great being the boss until tax season hits and you realize you owe self-employment tax on top of your regular income tax. But don't worry, there are some deductions you can use to offset this, like business expenses, your home office, your internet bill, your favorite coffee shop where you do all your best work. Just make sure you keep good records. Because if you're running a business, you're technically a walking, talking tax audit waiting to happen. No pressure. Okay, let's talk about interest income. This is the kind of money you make from the bank just because you let them hold on to your money. How nice of them, right? Interest from savings accounts, CD, or bonds is taxable income. Let's face it, interest rates aren't exactly giving us a ton of cash these days, but whatever interest you earn is still reportable income. So if your savings account made you $10 in interest, guess what? You've got to report it. So much for that easy income. Of course, the upside is that you don't need to do much to earn it, other than have money in the first place, which, if you're like me, is a bit of a challenge. Let's move on to dividend income. This is money you make when you own stocks or mutual funds that pay you a portion of their profits, typically quarterly. While dividends are a nice passive income stream, the catch is that they're still taxable. There are two kinds of dividends, qualified and non-qualified. Qualified dividends are taxed at the long-term capital gains rate, which is usually lower than ordinary income tax rates. Non-qualified dividends are taxed as regular income, which is a bummer, so make sure to check your dividend statements to see which type you're getting. Taxes are like that one relative who always wants to know your business. Next up, rental income. If you own rental properties, congratulations. You're making money while you sleep. But here's the deal, that rental income is taxable. If you're renting out property, you need to report the rent you collect as taxable income, even though you may have some deductions like property management fees, repairs, and depreciation. But don't be fooled, the IRS still wants their cut. So while you might be able to write off a few expenses, any net income you make from renting out property will be taxed. Capital gains, the glorious reward for selling something at a profit. Whether it's a stock, a home, or that collection of vintage Beanie Babies you've been hoarding for years. When you sell something for more than you paid for it, that's a capital gain. And guess what? It's taxable. There are two kinds of capital gains: short-term for things held less than a year, and long-term for things held more than a year. Short-term gains are taxed at your ordinary income tax rate, which, spoiler alert, is often higher than the rate for long-term capital gains. So, pro tip, if you can hold on to your investments for over a year, you'll pay a lower tax rate. It's like getting a reward for your patience. Okay, Social Security benefits. Many retirees think their Social Security checks are untouchable, but surprise, they can be taxable. If you have other income like wages or investment income, there's a good chance that up to 85% of your Social Security benefits could be taxable. So if you're living on Social Security alone and you don't have much other income, you probably won't have to worry about taxes. But if you've got a nice side gig, rental income, or investment earnings, that's when Uncle Sam will start knocking. So there you have it: wages, self-employment, interest, dividends, rental income, capital gains, Social Security. These are just some of the types of taxable income you'll need to report on your tax return. Some of it is taxed at different rates, and some of it can be offset with deductions or credits, but one thing's for sure, you've got to report it all. Don't let this overwhelm you. Just remember to keep good records, know what type of income you're earning, and be sure to report it accurately. Because while taxes might not be fun, getting hit with penalties and interest is way worse. So here's to understanding your taxable income, because hey, knowing is half the battle. Cheers to taxes, or at least to knowing how to deal with them. Remember, keep your taxes on track and keep more of what you've earned.